Well, here it is Thursday. We're digesting the latest export sales data that came out this morning. I'm Marlon Bowling with you, and I'm joined by the one and only Ted Seifried of Zaner Ag Hedge this morning. He hails from Chicago. He's a busy guy. He's been all over the place on the road here lately. So, Ted, thanks for taking a little time to visit with us. Let's go ahead and recap the current market action. Let's go to our quotes provided by bar chart here, Ted, and we'll start with the corn. And right now on the March corn contract, it's not doing much, Ted. We're all right now 3/4 higher at 485. So, yeah, I mean, it's just kind of drifting along. May corn now up a penny at 496 3/4. So we had a little firmer start in the corn, and it's kind of eroding away again. Soybean trade, well, it's modestly higher, we'll say. I'll go with the March contract. It's up a nickel at 13.20 1/2. By the way, the January did make it back up above $13. January is 5.5 higher. It's at 13.01. It got 8 cents below the $13 mark at one point, but it is back above it again. So kind of a good news, bad news thing. On the wheat in Chicago, March is down 3/4 of a cent at 6.32 3/4. However, all the other months are 4 to almost 6 cents lower. So that's a little intriguing what's going on over there. In Kansas City, the March is down 2. We're at 6.54 right now, and that would put us 7 cents off of our overnight high. Spring wheat in Minneapolis, March is down a penny and a quarter. We're now trading at 7.29 1/4. Okay, that would be about 7.5 cents off of our overnight high in that one. Now, the cotton market, that's kind of fascinating. We had a big gain this morning in March cotton, and now we're 278 points higher. We're at 82.53 per pound, not too far from our high of the day. We had a low of 79.52 overnight. And again, I'll point out, Ted, yesterday we had the March cotton actually test above 80 cents, and it couldn't hold. It went down and closed below it, and now we're over 82. That's kind of a weird trade going on in cotton today. So overall, give me a grade here on the grain trading so far this morning.
Yeah, for real quick on the cotton, a lot of times when you get to a big psychological number like that, 80, and you fail the first time, but then you turn around and test it again, so that looks good. The cotton activity here today looks good. Aside from that, grains, corn. This is the decision day for corn in my book, because we had the 5 higher days in a row bouncing off a contract low there in the March contract, and then we failed at the 50-day moving average yesterday and had the reversal lower. You're going to do that the first time you hit major resistance. We haven't closed above that 50-day moving average since early October. So that's going to happen. Now, what we do after that is a very big, important thing, right? Today, we're holding our lows there, which are the short-term moving averages, the 10 and 20. We've tried to bounce off that. We really need to get back to that 50-day moving average today. Otherwise, it's going to look like that was just sort of our corrective bounce in an otherwise overall downtrend. And the seasonality to trend higher between now and the end of the calendar year might be canceled for this year. I don't know. So I'm really hoping we find some strength before the end of the day in corn and we close up near those highs again. We shall see. For soybeans, obviously, export sales for both corn and beans were pretty decent. We had the additional sale of 121,000 to unknown. We're trying to hold on to some strength, but I mean, you had a new low close in soybeans yesterday. Man, it's been since, again, early October since we've been down here, and you've broken a lot of the key technical resistance or key technical support points in soybeans. So you really need a comeback day in soybeans here. And the fact that we're 9 cents off our highs right now just is not a great feeling at the moment. It is early in the day. Fingers crossed. I guess we'll see. But you have some markets that are just really kind of staring off into the abyss right now. You really don't have a whole lot of support underneath us, specifically in soybeans. It's just not a really good feel. I think the last 4 days of trade, and then potentially today, depending on how we end the day, could be a statement, really a call to action saying, hey, producers, this is not a month to sleep on. This isn't shut down shop and walk away for the holidays. This is a very key time for risk management right now.
So when you look at the wheat is backing up a little bit today, but we know next week it's going to show some big export numbers, maybe the next 2 weeks, actually. So if that's the case, do you think the funds have now turned their attitude around here on the wheat complex overall?
Wow. We've said that a couple of times, and then very quickly they've proved us wrong. This could be one of those times. I think a lot of that does depend on what happens with the row crop, though, right? I mean, if we can't continue to see sustained strength in the corn, I think they're going to feel rather comfortable about coming in and selling wheat again. What I will say is, last week when you saw that key reversal higher in March Kansas City wheat. The last time we did that, we had a 3-month rally that was good for about $1.80. Again, that might be a trick though. So I'm optimistic that wheat finds some strength. I think fundamentally wheat has good reason to try to go higher here, if at least for just a bit of a correction. But again, it's hard to trust the wheat market.
Yeah, it's been quite a long time, that long slide we have had. All right, we'll pause here. We'll come back and I'll get you updated on cattle and hog market activity right after this. Let's run through some of these outside markets here in this segment. On the Dow Jones Industrial Average Futures, on that nearby December contract, it's only 12 points higher at 36,124. So not much excitement over there. U.S. dollar index, though, is weaker by about 400 points. December futures at 103.710. That could be important. On the crude oil trade today, West Texas crude is now 39 cents higher. It's back below $70 per barrel. It had been above it this morning. January is now at 69.77. Meanwhile, when we look at our live cattle futures, we have February $1.30 higher. Well, they're catching their second wind here. They are at 164.85. And now they're within 40 cents or so of their high of the day. On the feeder cattle market, you have March now 235 higher at 214.10. And on the lean hog market at the present time, we currently have the February 90 lower at 68.40. All the months beyond that are over $1 weaker. Ted, the cattle market, it's going in fits and starts today. It had kind of a false start. It fell apart after the open, and now here it goes. So can we believe it this time?
Yeah. Well, Marlon, feeder cattle are doing what feeder cattle do. And after a big outside sweeping reversal down day yesterday that you would normally think should see follow through to the downside in any other market, right? Not doing that. Like you said, fits and starts. We tried to go higher earlier, sold off. Now we're trying to go higher again. Feeder cattle I think are giving technical traders just fits right now. Speaking of fits and starts. But the best thing that I have to say about this is that this sort of volatility that we're seeing, where you have these wild swings on any given day, in multiple days in a row, these kind of can be indicative of a bottoming sort of process. That's kind of what I'm hoping for, is that we are finally trying to carve out a bit of a low here in the feeder cattle after what is over 3 months of a massive epic slide. So we'll see. I really do feel like the feeder cattle market has really overshot what I would call fair value from a fundamental standpoint to the downside. But that can happen when we're trading markets, especially when you have markets that are, I'd say, dominated by the outside or the fund money, the large speculators, thinly traded markets that have big open interests that are coming from the funds.
True.
And cattle look like they're trying to carve out a little bit of a bottom here too. It might be early to say that. Fingers crossed, I guess. But the best thing I can say is this sort of volatility could be indicative of a bottoming process.
All right. Well, we'll keep an eye on it. Thank you, Ted, for joining us today. Always look forward to our comments with you. Ted Seifried of Zaner Ag Hedge with us here from Chicago this Thursday morning. So interesting stuff. Tammy, the cattle are coming around.